Hello again, everybody. This is Matador from freetradingvideos.com. It is still a nice December 3rd, a Thursday, and we're brewing through. It's about 12:08 p.m. Eastern Standard Time, and as we look at the S&P ETF, the SPY here, on a 3-minute chart, very, very intraday with lots and lots of bars, you can see that gap this morning, largely unfilled right at the open, and another fantastic run to even past the 112 mark. This area that we had been watching so closely, now tested again, did more than a 100% retracement of that gap fill. So if you're looking at this right through there, it's an important area to watch. And then it ran all the way down to test even the 111 mark, almost to the penny. Ran back up, and now we're chopping sideways on about a 50% retracement of the entire move. So if we look at where this ran from, all the way through here, there's your 50-yard line, almost to the penny between this consolidation and this new test. So I like to have that. And what's interesting about this area again, this 111.60 mark, is that is something that we've been watching for quite some time. This resistance, once broken, broke again and became resistance, and then broke, and now here we are again using that. So a couple of really fine tests of that, and then we bleed right back down through it. So 111.60 is still relevant to me in this symmetrical triangle formation we have going right now, right below the 50-yard line of this retracement. So again, the 111 mark, nice support. 112 still acting as resistance, and the 111.60 being a significant number to my eye right through there. On an even higher time frame, there's that 111.60 mark. Man, that is just awesome when you get that over and over and over and over again. It really lends credibility to a number like that. And these tests of the 112 are fantastic. Like I said, if we can hold up even above the 110 mark on a higher time frame, although that would be a perfect gap fill of this previous, that would still be a significant nice high base that we have forming on an even higher time frame, such as a daily. So I'll be watching how the market acts and takes apart data. It looks like the average interest rate for a 30-year mortgage dropped to a record low of 4.71%, and even in the face of that, we're still having a little trouble running higher into all this resistance. So I like the way the market took apart the better than expected data this morning, but then it gave it all back up, and now we're consolidating. Let's take a look at the trend. It is at 1.4, 1.37, so there's some good sized volume flowing into stocks on the decline. However, the trend Q is actually at 0.7, just near the neutral range, but a little bit more bullish than bearish. So there's a divergence between those two, kind of points to a consolidation. And the VIX, on the other hand, is rising nicely after a beautiful run up in price. All right, we had a big sell-off in the VIX. All right, so here is the rise in the VIX, and now we have this symmetrical triangle basing on its low, aka basing on its high for the VIX, so it's confirming this move for the S&P down in here. So anyway, nothing to say too much about, but I wanted to mention that it is being confirmed, and watch this break on the 15-minute chart of the declining 50 MA. So if you're trading intraday especially, here's a nice retracement. I'm going to remove that all the way back down to this gap fill, almost to the penny with this lower shadow. That was the run up this morning on price, the drop in VIX. So not the best time to go long in something when you have that kind of support on one of the broad market internals. So just a little eye-catching feature. So I hope you guys are having a great trading day so far, and you can look forward to D7's awesome video at the close, and we'll be talking to you soon.